Let's speak to Miata Farnbuller, who's the Chief Executive of the New Economics Foundation. That's a progressive think tank. Good morning to you.
Good morning.
Also with us is Lee Powell. Lee's CEO of GMI Construction, a large privately owned construction firm in the north of England. They've got a £350 million turnover, so they're a pretty big company. Lee, hi, good morning to you as well.
Good morning, Chris and Connie.
Yeah, well, tell us, Lee, how healthy is business at the moment? How are you feeling about things?
It's a little bit of a double-edged sword at the moment because the demand for construction and certainly certain types of developments is unprecedented, really, certainly in my career over the last sort of 28 years. So you look at the, as we call it, sheds and beds, you look at the main hotspot in the industry is private rental schemes, built to rent, affordable homes, student accommodation, and then obviously the warehousing, logistics and industrial sector, which has had unbelievable, unprecedented levels of demand, so the order books are topped up. Everybody has a strong pipeline of work. The difficulty has been the inflation. Which I've actually been on your programme previously discussing the inflation.
Well, you must also look, if we're all dealing with energy bills and that's causing a lot of this inflation, you must have pretty significant fuel costs, don't you? And then obviously if you bring in raw materials, and what about supply of labour? Because that all adds into this as well.
It certainly does. The main problem for us as a management contractor, a large contracting organisation, is the cost of materials and the cost of subcontractor resource. So a lot of our work is outsourced to subcontractors and suppliers. The difficulty is that all of our clients require a lump sum fixed price. So you fix your price at the beginning of the project to see you through to the end. And the difficulty is trying to pin the tail on the donkey in respect of how much the steel, the concrete, the brickwork is going to cost. It's incredibly difficult.
You all depend on each other, don't you, essentially? It's a kind of circular economy in your industry, ultimately.
We certainly do. And, you know, the one risk that I can see as a result of these interest rate increases is the cost of borrowing. Now, we're very fortunate. We're a completely debt-free organisation, which is great for us. But a lot of our supply chain, you know, they're geared companies, and I can see, and I'm starting to see, and there's some examples of business failure. That then gives us a great risk if we're, you know, halfway through a project and our critical supply chain becomes insolvent. We're struggling to finish the project on time.
Let me come back to you in just a second, Lee. Let's get some broader thoughts from Miata Farnbuller, as I say, Chief Executive of the New Economics Foundation. It's a progressive think tank. When you look at the different challenges that we're facing as a nation, Miata, interest rate rises now to try and head off the inflation levels that are predicted, and the possibility of recession. It's an interesting one, isn't it? The bank's essentially saying, look, we can accept recession in a way if we can use these interest rates to at least try to dampen down inflation.
Well, so I think that's completely the wrong call. And the reason I think it's the wrong call is that on the sort of balance of risk, I think recession is worse for us. And the key point is, let's remember what is driving inflation. It's been driven by, if you like, external factors. It's been driven by energy price rises. It's been driven by the aftermath of the pandemic and huge disruptions to the supply chain. So increasing interest rates has very little impact on any of that. But what it does do is that it makes the cost of borrowing more expensive, which is going to hit people in their pocket, particularly, you know, mortgages, but when people are having to borrow just to get by, and it's going to dampen investment at the time that we're looking at recession.
At this time. So are you in the camp who say the Bank of England should have been increasing interest rates way before, rather than at this point where we might well be facing recession?
No, so I don't think that, you know, of all the levers that we had, I don't think that increasing interest rates is going to help, for the very reason that when we increase interest rates, it has an impact on recession when the economy is overheating. That's when the economy is doing really well, when people are spending lots, when there's lots of demand in the economy. That has not been the reality in this country for the last 2, 3, 4 years. So interest rate hikes doesn't do the job of dampening inflation.
Okay,
now,
so what would you...
hoping,
Go on, sorry, carry on.
What the Bank of England is hoping is that by looking like it is acting and being tough on inflation, that might change our expectations. And therefore, we don't behave in particular ways. We don't ask for as much of a wage increase. We don't necessarily borrow as much. It then sort of has an impact on the overall economy. But that's quite a big gamble when on the other side of this, you know that the action that you're taking is likely to make a recession inevitable.
So obviously different economists approach this in different ways, don't they? Some people will be supporting the Bank of England's actions, others like you do not. So what would you suggest otherwise we should be doing?
So for me, I don't think that, if you like, the way that we solve the problem sits with the Bank of England. I think it sits with the government. It's about fiscal policy, not monetary policy. And what I mean by that is that in the short term, the priority when it is really, really tough out there is just to support people. And so I think the government, for example, should be putting a much tougher windfall tax on energy producers in order to raise more money, and then you use that to essentially provide people with a cost of living rebate.
Well, we heard Liz Truss in the leadership debate last night saying she is not in favour of that. She's not in favour of the idea of surprise taxes for companies who invest in the UK. So that looks like a non-starter if she becomes Prime Minister.
Well, I think she's going to come under a lot of pressure because when we're seeing, and the key thing is, this is not run-of-the-mill profits. These are huge, extraordinary profits that are not having an impact on the investment pipeline of countries. They're being of companies. They're being used to essentially, pay off dividends and buy back shares. So this idea that, in times when companies are making 5 times the profits they were making last year, didn't expect it, haven't done anything to deserve it, that you wouldn't tax them all in a way that many other countries are doing.
She also argues that shareholders are, it's not fat cats sitting in offices as shareholders necessarily, is it? It's ordinary people who haven't had a dividend for a few years.
That's not true in the case of oil and gas companies. Something like less than 1% of the shares that are held by oil and gas companies in this country are through pension funds. So that's just not true.
Okay.
And in the end, the question is who bears the pain? And I would argue that the number one priority of the government is to protect people who cannot absorb the sorts of price rises that we're seeing.
Okay. Thank you very much indeed for that. Thanks for explaining your view. Miata Farnbula, Chief Executive of the New Economics Foundation. Just a final word from Lee Powell there. What might all of this mean? Because it's so sort of confidence-driven as well, isn't it, Lee? People will be looking at this and thinking, well, if we do go into recession, if some of those businesses fail in the way that you described when we were talking to you before, what's it going to mean for my job? Where are you with looking at your workforce for the year ahead?
Yeah, I mean, we've the most important resource that we have is our people. Without a doubt, we're a management contractor. It's all about getting the talent within the business and retaining the talent. We actually made the decision to pay an average of 7% wage increase very recently to make sure that we can retain that talent and keep driving the service that we provide to our clients. I actually personally think Miata talks a lot of sense there. I think the interest rates are a little bit, the increase is a little bit futile because it's been driven by oil and gas prices, energy prices because of the pandemic, because of the Ukrainian war. So I don't know how increasing interest rates, which will dampen down consumer spending, is actually going to curtail and control the energy price increases, and that's what's driving things.
Well, this is it. This is what the Governor of the Bank of England said yesterday. A lot of our listeners will get in touch with other factors, of course, as well. Demands following the end of lockdown. Brexit, of course, will be brought into that argument as well, but he pointed very clearly at the energy crisis and the bills we're having to pay as a result. But Lee, thank you. Thanks very much indeed. Lee Powell, CEO of GMI Construction.